Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, very good morning. Welcome to the AJ Brown Show. Today is January 16th. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. How are we feeling today, AJ?
I'm feeling alive.
Definitely alive. If you guys checked out our background, we got, I think I was looking at your notes today, and this transient, external, stochastic seems to be like a big theme, whether it's political or societal. There's just a lot going on, and it seems as if it's capturing the majority of the headlines of everything.
It's capturing the headlines, and investors don't know what to do. There's a lot of uncertainty, a lot of confusion.
And so I guess we could start off with the markets, just kind of doubling down on what we talked about last week with that ascending consolidation, looking like it's consolidated more this week than we even did last week.
Yeah, it sure has. Let me overlay some of my drawings that everybody loves to take a look at. So, the first thing I want to notice is we may have found a top back on January 12th, so about 4 days ago, but it's been stagnating and not giving us a signal until now. So, what we use to confirm whether a top or bottom has been found is a crossing of the 3 and 5 day exponential moving averages. So I just brought on a second chart. So you can see it's been kind of just skirting the line of having that 3 cross that 5. And I usually like to see it be very decisive, like we had over here and definitely over here and here. And this has been so non-committal, and I guess that's what we can define what's going on right now, which is non-committal one way or the other. The only thing we're really seeing is a movement into like really safe havens like precious metals, but otherwise in the equities markets it's a lot of non-committal. So that's the first thing I wanted to point out.
And do you consider this to be surprising, considering that Jan or December is kind of a natural consolidation because of the seasonality, and you would think that the first 2 weeks in January we would get a general market stance of whether we want to go up or down. But like you said, and we can go through some of the different events that are rocking the world, but it's almost like not one of them is outweighing the other. Like there's a lot of major discussions taking place.
And the only other thing, remember when we were talking about, well, I can even pull up the picture. I'm going to draw a parallel here, but remember when we were talking about how if we go back and look at how the Federal Reserve has used their quantitative easing and quantitative tightening. Let me go ahead and zoom in on this a little bit so you can see that. So this is showing the Federal Reserve and the effects of them buying treasury and mortgage backed securities, basically buying bonds on the bond market with their created money. So, the Federal Reserve just makes money and then buys these bonds. And so you can see that we had a huge amount of bond buying compared to where we had been for since the inception of the Federal Reserve during the 2008 bond crisis. And you could see they went from just under $1 trillion to 2.25. And at the time, doubling the holdings of the Federal Reserve of their bonds and treasuries in this funny money had this huge effect. I mean, it basically counteracted the whole collapse of the financial markets in 2008. But then you can see over time that has gotten less and less effective. In other words, to counteract the pandemic scare in 2020, they had to do even more than what they had to do in 2008. And some people would argue that the pandemic scare was actually less of a problem than the 2008 financial meltdown in the financial markets, not in the world, but in the financial markets. So it took more of this medicine in order to get the same effect. The parallel I'm drawing right now is right now, you know, there's a lot of headlines, whether it's, the Federal Reserve being under criminal investigation as kind of a, there the Jerome Powell thinks that it has to do with the fact that he's not just dropping interest rates, whether it's going against Iran, the on again, off again threats against Iran and the revolution they're having, whether it's on and again, off again threats towards Denmark for the kind of possession of Greenland, whether it's going after, big energy players for, or I should say big data center players, big AI players, because their data centers are using too much electricity, whether it's going after financials because we want to cap the amount that we can charge on credit cards. All of these talking points are not having the same effect as they did, say, a year ago. In other words, the taco trade is real. Trump talks a lot, but and then the throw in there the surprise of, like, all of a sudden overnight Venezuela has been, acquired, or not really acquired, but Venezuela, the the authoritarian government has been kidnapped and brought to justice by the US, but then what do we do now? All of that, so there's so much craziness, and people, I think investors are almost getting numb to what they would have been reacting crazy to a year ago. So that's what I think we're actually observing, is a numbness to all of these, big headlines. The headlines may be talking points on the evening news, but investors are like, I don't know what to believe.
I like what you said there, that the taco trade is real, because it's starting to become more of a reality that when Donald Trump says he's going to do something or wants something, now more people are getting in line and are like, yeah, maybe we should, take a look at it. Even, like, for example, the credit card thing that you're talking about. I know him and Elizabeth Warren go back and forth a lot, but that was one of the topics where he, like, actually reached out to her because she was a big advocate of it. And so, as much as, people might say that, he's a politician, it seems as if he's trying to address some of these things that have been in limbo for quite some time. I know the Venezuela thing's kind of out of nowhere. The Greenland thing is also kind of nowhere out of nowhere, but maybe we as citizens just think that, and it's always been kind of in discussion. But when I see these, the other one that also came up that we didn't discuss was the home ownership by institutional investors, and right, which we don't know how that'll be executed, but it's almost as if all these things are good in theory for the economy and US and citizens, but not so good for corporations because they're going to be making less money. And maybe that's what the market is kind of battling. Like, what, like the credit cards were kind of in flux this week when all that news was, coming out, right?
Yeah, and financials took a little bit of a kick in the teeth this week because of that.
I actually follow a lot of traders too, and they've been posting that they've been having very difficult trading starts to the month. And so does that kind of bode well for, your strategy a little bit more so than people that are looking, day-to-day markets? Because I mean, we're getting gaps up, we're getting fills, we're getting, rallies in the afternoon.
I've heard for my directional traders who are still trying to trade some of the symbols that are more popular, that they've been whipsawed in and out of trades. I do see some directional trades coming on some boring stocks, and I think we'll talk about those later. But for the most part, I find that I'm hearing people who try to just trade, stocks and equities and even commodities for that matter, that they're having a hard time navigating the price action.
And I believe we did get see some inflation news this week that was
We
almost like
did.
middle of the market, not nothing crazy.
Nothing crazy. So we got. I've been looking at the economic calendar this morning. Let me zoom in a little bit for you guys, and I'll make this full screen. So yeah, Tuesday we got consumer price index numbers, but the Bureau of Labor Statistics is still trying to catch up. And remember, they're on a skeleton crew with a new person in charge because Trump didn't like the results over the summer, so got rid of the person who runs this department, put in somebody. So that's another thing. Investors, number one, don't know what economic data to believe. They're having a hard time with the trust in the data. But this one, the consumer price index, this was for December. So that makes sense. And it shows 0.3% for the month. And so that's, you take 0.3% and you multiply it by 12 months, you get 3.6. That's a little bit on the high side. Although when you take out volatile food and energy, well, now you're talking about 0.2. So that's a little bit more in line. Yeah, 2.4%. That's more in line. But are these numbers even actually worthwhile? Then you get on Wednesday, you got your producers price index, but this was still for November. So they're still behind on tabulating the data for wholesale inflation. And wholesale inflation actually surprised some investors. It's really creeping up there above 3. And so they're wondering because a lot of times when wholesale inflation starts to creep up, we start to see it in retail inflation, like 3 or 4 months later. And so now people are wondering, oh my gosh, we already think the Fed is not going to do anything with respect to interest rates until Jerome Powell is gone. But what does this mean? Does this mean when Jerome Powell's gone and the new person's in, that there's going to be an inflation problem that, it's going to make the new person not want to do any rate cuts either? So that's kind of the question there. But that's for November. Who knows what's happening in December? We got retail sales numbers for November, right? It's not even up to date. And these looked good, but that reflects holiday buying. Then we've got existing home sales, nothing really new there. We got data that basically is tepid for the upcoming Fed meeting. Retail sales for December was supposed to be released on Thursday, but it didn't. The Bureau of Labor Statistics punted on that. So, yeah, the economic news is still not really giving us any sort of thoughts. But yeah, interest rates not expected to change at the end of the month, not expected to change in the middle of March. And for Jerome Powell's last session in April, they're not expected to change. I mean, right now it's 67% chance that they'll still be the same. So in June, there is expected, but now, and I watched these numbers day by day. This was a little bit higher yesterday. So now it's even now because of those numbers that we just talked about in the producers price index, investors are now betting on the idea that maybe it's a 50-50 chance for a rate drop in June. So, and June's pretty far away when it comes to interest rate discussions. So who knows?
And my question on that interest rate front is, I mean, that's looking like almost the next 5 months of not really swaying one way or another. Does that also does that then kind of make the argument that the directional is going to still be very consolidated because these rate moves and decisions are the precursor to a lot of overall market movements, and if we're not expecting those, I mean, sideways chop could be there could be a good case for that for the next 3 or 4 months.
I mean, that's what I've been telling my program participants is that we have to get used to side. I mean, you would think so. January, if you look over history, how we do in January for a new year kind of explains how we do for the whole year. And that's been off a couple times, maybe as much as like 20-30%. I'd have to go check my numbers. But for the most part, how we do, and so you would expect by the middle of January, we'd have a bias by now, either up or down. And the truth is so far in January, we kind of have been sideways chopped. So I'm kind of thinking that this is 2026 is going to be the year. In fact, I wouldn't, especially if these midterms in the US come up and the Congress flips sides, which is highly likely right now. I was looking at some of the predictive markets, and it's up to 70% chance that people are betting that the not only will the one side of government called the House flip to the other side, but the other half of the legislative branch, being the Senate, might flip as well. Those predictive markets are showing high. If you have that, then Trump becomes a lame duck for the next 2 years. The next, from 2026 to 2028, or whatever, 2027 to 2029, there's not going to be any more of this very aggressive policy that we've had for the last year and a half. Instead, it's going to be Trump defending himself from impeachments and a stall, right? So I wouldn't be surprised if the markets just go sideways chop for the next 3 years. I mean, I'm telling everybody that they need to understand strategies where you can profit on time passing by and changes in anxiety, not just price action, because price action's quite unpredictable. And you're going to have to be able to do your screening process. Screeners are going to be key in the next 3 years, because there will be a couple sectors and there will be a couple of companies that you will be able, that'll just pull out from the pack. But I don't think you're going to get these broad market decisions like what we've had, since the pandemic and the whole recovery from 2020 through 2025.
You touched on anxiety, which makes me always think of the VIX, which is the counter to where equities are. What's the story with the VIX this past week?
Well, so the VIX has been creeping up. There hasn't been anything yet that causes investors to freak out, right? So there hasn't been anything that would cause our VIX trade. And can I just kind of throw some stuff on the board really quick with regarding to our VIX trade?
Yes. Is this the one that you have on? Is this a new VIX trade that you're putting on, what we talked about last week?
No, this is the same VIX trade. It expires. So the VIX options like to expire on Wednesdays. Don't ask me why. So mine's coming up around for next Wednesday. And so you could see my strike prices here, 1450 to 1550, and then 20 to 21. This is a credit spread, right? And so if the credit spread, I got money, right? I got money up front for this trade. And ideally, if this trade works for you, and that means that price action would be above $21, this trade would go to zero, meaning I would get to keep all that money I got up front. On the flip side, this trade is a debit spread. So I paid some money in order to get into this trade. And if it works, meaning the price action is above the strike prices, above 15.15, it'll go for $1. Now, if you lose on the credit spread, you have to come up with $1, right? When you lose on the credit spread, because the difference between the two strike prices is $1, in other words, the spread is $1, you're either going to make $1 or you're going to lose $1. That's how these trades end. So I think when we talked about this, I got into the debit spread. It cost me 83 cents per share, but my credit spread paid me 88 cents, right? So I came out with, when I acquired these two things, 5 cents of credit, right? So I came out ahead 5 cents. Now, what's going to happen when this trade ends? Assuming prices between these two strike prices, 15.50 and 20, this one's going to pay out $1, and this one's going to cost me $1. This one up here is going to cost me $1. And so it's going to come out at zero. These two, the winnings and the losings of these two spreads is going to come out at zero. So they're going to cancel each other out. which means whatever I made on the front end will wind up being the money I walk away with, in this case, 5 cents a share. That's what this is supposed to do. If you wind up in the middle here, you're not supposed to make money. It's supposed to be a break even trade. In this case, it's slanted a little bit to the front end for 5 cents of gain. Where this really helps you is when the proverbial poop hits the fan and the rest of your positions in your portfolio are under scrutiny. They're probably, doing poorly, especially if they're directional positions. And in that case, that's when both of these trades go to winning. I make $1 here and I make $1 here, and my initial investment is, well, it's 5 cents of credit. So it's not even, I didn't even have to put any money down in order to make that extra dollar, right? So it becomes a major winner for you. But a lot of people get confused on the VIX trade about what we're trying to do here. We're trying to create a break even trade for most of the time, but that when the few, scenarios like what we had here in November and here in October, where, something happens that makes the rest of your portfolio go in trouble, this VIX trade winds up bailing us out because it goes to a huge gain. So if you put 10, 15% of your portfolio into here, you get 3x back, right? When the rest of your portfolio, it's a hedging trade. So people might have to go look up in the dictionary what hedging means.
And so you're saying that previously you've seen this exact setup get as high as a 300% return?
Yeah.
And
Well, even more if you think about it. I mean, not factoring in the amount of money that, it costs to do the credit spread. There's always a margin requirement. But once that's all gone, I mean, the truth is when everything is settled, you wind up with, you were going to get a credit. So it was no money out of pocket to start the trade. When everything is settled, no money to start the trade, and you wind up getting paid $2 a share, right?
so in theory, if anybody watching's got a pretty big portfolio, maybe is long-term investments, you could rotate this VIX trade every 2 or 3, 4 weeks.
Well, it's whenever we get a bottom. And so we actually got a bottom here, and this is where I jumped into this trade. And then, of course, I got a reversal signal going into the holiday season. Other people who weren't as eager as me waited, and they got in here. They actually got more favorable setup than I did. But we're basically all going to wind up at the same, depending on that initial way. So long as you end up in between or to the top of these, the payback is here. This is payback. The break even is down here. And so because of VIX being a measurement of anxiety, this is break even, or slightly, again, if you structure it right, slightly a credit. I'm going to be walking away with 5 cents per share. But that's how this trade works. And a lot of people, they got confused about where to place the strike prices. And anyway, I'm creating a guide about this as well as a masterclass. So stay tuned. We'll have that in the next couple of weeks that you guys can then join in and get a hold of the guide, take the masterclass, and have a better understanding on this.
It's like every time you describe this VIX trade, I'm looking over at the notes and I think of this transient external stochastic shocks and the list of potential shocks that we discussed
Right?
earlier this morning. And it's like any one of these could go off the rails and we see this spike up. And so that signal that you indicated earlier that gives you your buys and sells, that's available to the public. So we've got the link to that in the chat. We've got the link in the scroll bar. So if that's something that you're interested in incorporating on your end, that's one of our gifts to you guys watching.
Mhm.
And then
We like to use, by the way, just for clarify everybody, we like to use what we call our fast MACD on close for the signals onto this.
and so I do want to bring up just the your quick links page real quick because I threw that in the chat. It's the same link, right? So we've got this great AJ's quick links page where we've got links to all of AJ's socials. Up here, you can grab that indicator suite. Please hit that subscribe button on the YouTube channel. I mean, when we cut this long episode down in the shorts, we're really getting some good engagement on some of these individual topics. So if you don't have time to watch the full show, hit the subscribe button and get some of the shorts throughout the week. We've got, and then so if you're new to options trading in general as well, this free daily workshop is a great starting point. Are you laughing at the dog? Is that what
I am? I am. I love it.
He's trained well to be a security dog, but he's a Cocker Spaniel, so he doesn't know that he's not really dangerous. But I give him hope, and I give him purpose. We've got the free workshop, like I discussed. You can learn more about Trading Trainer. We've got one-on-one coaching, and we highly encourage you guys to get involved and join the program. All right, we're almost close to the midway point, AJ, but we do have a morning sip, but it's kind of something that you and I have been discussing in the past. And I actually sent you a tweet yesterday that was pretty funny, but I guess we could just start with that tweet and then talk about, or maybe even ask some of the viewers what they think. But essentially, based on the Greenland news, somebody opened a new Polymarket account, put $66,000 down to win $380 on the idea that Trump can acquire Greenland. And so I know you and I were going back about this new, what do they call this?
Predictive markets.
Predictive markets. And as we were talking, I pulled up Polymarket and look at the list of things that you could take a position on. This one was the craziest one to me is Elon Musk number of tweets between January 9th and January 16th. 59% believe he's going to tweet 520 to 539 times. Will the supreme leader of Iran fall? 7% chance. And it even gives you like the volume numbers. And so I guess maybe we should ask the viewers, is anybody using these tools? Is anybody involved in the predictive market space? AJ, are you intrigued to enter it as a concept of investing?
Well, you and I have been talking about this. The Robinhood platform that you like has been getting into the poly markets or getting into the predictive markets, Polymarket, Kalshi. And then I sat down with some big financial marketers at the Financial Marketing Summit, and this came up as one of the biggest topics. We've got the people saying that predictive markets are going to be something that not only you can trade on, but traders can use this as a form of analysis. And so, I'm definitely intrigued. Being able to use yet another tool. I mean, this is just like looking at the derivatives market, but now this can actually guide or helpfully guide what we do in the markets.
Well, I pulled up the Fed decision, and it's almost like, how is this any different than what we were looking at earlier in terms of just buyers or sellers of a certain contract for these potential things to happen?
And I almost feel like, because everybody's been referring to what I refer to, which is the FedWatch survey. But if you actually have folks putting money down, and I think volume has to be the great validator. So I'm glad that they have volume numbers on Polymarket. But the more people you see actually taking money out of their pocket, I find that that's more telling than people who answer a survey, right? Because people who answer a survey who have nothing on the line for it will actually respond with like their moral brain, which isn't actually the brain I feel like guides people's actual actions. So we are human, and so taking $1 out and actually that's like more truthful than what you answer in on a survey. So I think these predictive markets are so interesting and are going to become so useful, not just to trade in, because I'm not sure that's where I want to be, but for me to analyze in order to make my decisions in the more traditional markets. I think that's going to be fantastic.
Yeah, like that Elon Musk tweet one is definitely outlandish, but there's a couple of them that are interesting. Like, who will Trump nominate as Fed chair? Now, this has great impacts in the financial
Right?
concepts, but you can't really bet or invest or hedge yourself in any other market. So this almost becomes a viable play of some sort. Whether the I guess Kevin Warsh is our leading candidate now, and what his overall stance on rates in the economy are. So
Yeah, and in fact, that Kevin Warsh, that just changed. In fact, CNBC reported on this predictive market change. Kevin Warsh was not even in the running, and then Trump talked about how what was his name from Kevin Hastett, the National Economic Council director. He said, I like Kevin where he is. And all of a sudden, zoop, Kevin's no longer the guy that we've been talking about for the last 6 months. And now it's going to be this Kevin Warsh. And it's interesting. He likes Kevin's.
Yeah, and you mentioned that I'm a fan of Robinhood. That Robinhood's predictive market isn't a desktop. I can only do it on the mobile, but when it comes to sports betting, because I'm in California, you're not allowed to bet on sports, and so I've turned to Robinhood, and what I like about it is it's happening in real time. And I was explaining this to you before the show, where it's like, as you can see, I'm a big Bears fan, right? We got a big game this weekend and get against the number 2 Super Bowl favorite, the Los Angeles Rams. And so the way that Robinhood kind of works, right? So like right now, Chicago has a 6% chance. And so Robinhood works on this cents to the dollar concept, where I could essentially buy this contract for 6 cents. And then if the Chicago Bears win the Super Bowl, it pays out $1. And if they do better, it kind of goes up. Like, say they do beat the Los Angeles Rams, this would shift a lot, and my 6% chance might bump up to like 50, 55, 47. And so that's 6 cents to 46 cents, which is 3x plus return. And so this has been just phenomenal to watch. And then for the Bears example, is we have had games where it's gone down to like the last 7 seconds. And so the predictive chart is going like this, like their chances of winning went from like 3 cents to paying out $1, 1 or 2 plays later. And it's just phenomenal to watch. I haven't tried the poly market, but after talking about this and seeing the uniqueness here, I might create an account later this weekend. And then, continue to use the Robinhood, because Robinhood actually just sent me an email this morning and said you can straddle positions. You can straddle predictive positions in sports. And I was like, wow. I did see a funny tweet, though, where someone was like, hey, let's just make insider trading legal. And I guess this is like, if you know what's going to happen with the Trump acquisition of Greenland and you put in 66,000 in on it, is it really illegal? Like, do we have rules to say you cannot do this? I think that the dynamic is changing quickly.
Yeah. It's going to be interesting. And Poly Market, and I might even make an account on Kalshi, Kalshi. That's the one I keep hearing about as well.
Yeah, so we'll give it a shot, maybe on both of us, and kind of give a recap later.
And if any of you out there listening to us either live or on the replay have done anything with predictive markets, I'd love for you to comment in and let us know what kind of experience you have, if it's just as a lurker like I have been, just barely, or if you actually are doing something. Let us know so that we can kind of drill in on what um, you know, what you're doing versus what, um, yeah,
I,
versus what I'll be doing.
Yeah, and if you have any tips, any success stories, please,
Yeah,
we would love to hear those. I
I,
do
I'm a
remember
neophyte there.
I do remember during the presidential election, Kalshi was pretty much calling Trump to win earlier
You
on,
know.
and it's almost like we didn't wanna believe it.
Yeah. 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 And like I said, and who was it? Somebody put a big bet on that election, and the way he did it is he actually, or what gave him the confidence to do that was he actually started doing surveys in key places, and instead of calling people, and he was doing it all on his own. He like, brought in friends, and they made a makeshift call center, and instead of asking, on the phone, who are you going to vote for? He asked, who is your neighbor going to vote for? Because everybody in their moral decision making was saying, well, I kind of want Kamala because, but in reality, they just were afraid to say they were voting for Trump, but they wouldn't mind calling out their neighbor. So they totally, and so the guy did this in some of the key, those key battleground states, and said, "You know what? I'm going to put $100,000 down, or whatever amount he put down on Trump." I heard this story explained to me at that summit that I went to, that, all of these big traders, big marketers were talking about how important predictive markets are going to be in 2026. And so I better jump on board.
It'd be crazy if we could get that, your indicator on one of these, like, predictive markets to give us buy and sell like that, maybe there's technicals coming in the future, so,
Yeah.
we'll keep an eye on that. Alright, folks, we'll keep the party going. We're gonna take a short break here. We've got about 23 minutes left in the show. If you have anything that you want AJ to run through, we could potentially make some time. Otherwise, we've got AJ's pick of the week, something that he's looking at that he likes. We've got our speed round, some names from around the country, and that's you guys got to sit tight for that. But we're gonna take a break here. We've been rolling for about 40 minutes. Grab some water, grab a drink, sit tight. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So before we go into your pick of the week, I do want to. So right now, the percentage of possibility of Trump acquiring Greenland in 2027 is 17%. I know yesterday I kept seeing this 700 billion number being thrown around as the price tag so far. What are your where do you think we stand with Greenland?
Well, and so you guys know I live in Washington, D.C., and there's a lot of politics that happens around here, and there's a lot of people involved, especially, with the legislative branch, Congress. And I think that a purchase is possible. 100 years ago, we went up against the Danish once before, for the U.S. Virgin Islands in 1917, right? And Woodrow Wilson at the time made a argument that the U.S. Virgin Islands had to be under U.S. control in order to protect the Panama Canal. And we bought Greenland from Denmark, and Denmark was balking at it then. And I think we paid something like, I don't remember, maybe it was 50 million in gold back 110 years ago. That was a lot of money. So yeah, I actually heard the number was closer to a trillion, like 900 billion or 980 billion, but 700, 900, I think it's all a drop in the bucket. I think that's possible. But I don't think that the Congress people are behind a military, because I know there's a lot of threats to Denmark. And I'm not sure, you can get more bees with honey than you can vinegar. But I also think that the legislators, even a lot of the GOP legislators, are not going to stand behind Trump if he wants to take military action to acquire Greenland. I think it's going to be more of a financial decision, but I think that he really wants it. I actually think, looking at some of the thoughts behind why it's a strategic thing, it actually makes sense, right? The just to keep the Russians and the Chinese out, the rare earth metals, and global warming or climate change is real, and Greenland's ice is melting, and soon Greenland will be a place where we all want a vacation. So it'll be the new Maine. So those are all strategic reasons why the U.S. might want to control Greenland. And I think this is his mission. So whether he makes us taxpayers fork out $1 trillion or so for it is another story. But I don't think it's going to be acquired by war. I do think it's going to get acquired.
Yeah, it's like Hawaii was this island way off in the Pacific, and it's like, well, what do we need this thing for? It's everyone seemed to come around to accepting Hawaii as a state, as a people, as Americans now, and it's like, how's that any different than Greenland? The one thing that keeps drawing me to liking this idea is when you look at the shipping routes, right? If you look at the shipping routes, and we as a capitalistic society really rely on trade and having more control of those shipping routes, away from our adversaries, because if they're going to South America, these are routes that they're taking. They got to be playing ball essentially. I do kind of like the idea.
I mean, it makes sense. It makes sense, especially as more of those shipping routes are opening again because of the melting of the polar ice. It's just easier to go that route, and then also airplane routes. I mean, if you've ever flown to Europe, you know that you fly over Greenland because that's the way that the Earth is smaller, is to take that northern route. That's physics or geometry around a sphere. So, and that's, if you look at even going back to Cold War discussions of how missiles would get from one continent to the other, they go over Greenland. So it just makes sense. But, I don't think it's going to be a military action. I think it's going to be a financial thing. And I think that it's because he really wants it. Because I think you could actually, Denmark has never been an adversary. I think you could actually negotiate with Denmark and get a bunch of U.S. bases there and get them to control the waters. But I think he really wants it, and I think he's going to get it no matter what it costs.
Yeah, we'll keep an eye on it. Very, very interesting stuff. What kind of bothers me is when I see people calling us imperialists and dictators and taking over other people's land, but it's like, that's how we've evolved America. Like, that's how we've evolved all our 50 states over time. So maybe there's politically more clean ways to go about it, but Trump is just kind of a bully at times. He's like, I'm gonna pull up with my battleships and we won't go to war, but I just want you to see them. I want you to get a good view of them. And then people be like, oh, but that's military action, et cetera, et cetera. I'm in for the show. I'm tuning in. I am catching all the blurbs. Big fan of just watching history unfold, because I know one day I would love to be able to tell my kids, like, hey, I remember when we were trying to get Greenland or whatever, or we didn't pull it off. All right. Either way,
I think we will.
Yeah,
I'm a little bit more dovish than you are, but at the same time, I'm also a realist. Somebody asked me at the Financial Marketers, he's like, are you a Trump fan or aren't you? I'm like, you know what? I'm a realist, and this is what I think is going to happen. So, and I have to be, because if you're going to trade the markets, you got to set your emotions to one side, and you have to just look at what's happening, pay attention to the patterns, even if the patterns are patterns in anxiety and fear versus patterns in just actual price action, and trade them. And that's how you make a living. So that's what you got to do. You got to separate your feelings and your thoughts, and you just have to be the disciplined options trader.
Yeah, the 17% chance is looking really, really good. I might go ahead and put 100 on that by the end of the year and see what pans out. But very exciting stuff. All right, folks. We do a lot of chit chat about what's going on with these transient external stochastic shocks. But ultimately, at the end of the day, there's still individual plays and opportunities and names and sectors that we like, that AJ and the team behind the scenes like. And so, AJ, this week, we're going to pull up your pick of the week is a name for a brand that we've covered in the past, not too recently, but you're liking the electric car manufacturer Rivian, ticker symbol RIVN. What do you have setting up here as a play?
Well, and we've been talking about Rivian, and you're right. We haven't talked about it in a hot minute. And that's because we were talking about it before, and I'm doing basically a retracement analysis. By the way, I told you guys to look out for my guide and masterclass coming around on the topic of the VIX trade. Look also for my guide and masterclass on doing this retracement analysis, because I think it's the gold standard for really being able to understand what's happening with a particular stock or even the broad markets, and pepper in a little bit of point and figure chart, a little bit of Wyckoff method, and you'll be whatever it is, heads above where most people who are looking at charts and doing trading on them are, with understanding it. Rivian is setting up as a swing trade, and I think that we should be ready to trade it as a swing trade. This retracement analysis is showing that, it's got a little bit of an uptrend and it's doing an unusual pullback. That's what swing traders look for. And so I'm actually looking for that bottom signal. Some of the indicators that I use in my swing trading, swing trading is done very accurately when you've got the right pattern. And I think Rivian is building up. I'd like to see Rivian's pattern stretch out a little bit longer to give me more confidence in the swing trade setup, but the pattern is materializing, it's maturing. And so some of the indicators, once I've identified a pattern that I like to use, are Williams percent R for my leading indicator. So the Williams percent R, usually off the shelf these days, is set up for day traders. So you have to go in and set it. And if you pay attention, you see how I like to set it for my end of day trading. I go 14 days, -10, -90. That's your leading indicator. And that is not going to be your confirming indicator where, you actually make the trade. The leading indicator tells you when the pullback is enough. And so you see this little yellow line down here, Sip? When the Williams percent R dips below that yellow line that I set up there at -90, it's pulled back enough. So we just in the last 2 or 3 days have gotten a good pullback. So now we're going to wait for a lagging indicator to confirm that the swing is in full force. And so this is going to be a quantum swing trade. That's my, I can't give investing advice to anybody out there, just educational advice. But when you get that confirmation, not before, this might be a good thing. And we could trade the stock, buy the stock and buy and sell it. We could trade a substitute option, and I don't think we need to use one trading at parity. I think you can go out to like June. I think I wrote in my notes that a June 15 call might be just what the doctor ordered. Or you could get a little spicy if you want to, play the anxiety on this as well. You could actually use, for instance, an out of the money. Like I put it out there that if you wanted to go crazy, put a $25 call. So that's an out of the money. It's going to be really inexpensive. Make sure you size the position accurately if you do that, because that's a very speculative play. And then you could even, when you get your exit signal, instead of exiting, put a collar in place and kind of milk this trade even longer. So there's so much you could do with this particular swing trade, so many different variations. But again, you want to wait for the lagging indicator signal. Anything from a MACD crossing, or I like to look for a VWAP close above the VWAP 7-day simple moving average, something like that, to let you know that the pullback is done and now we're going to start heading back up. And you can catch that swing in so many ways. And the best way really matters on what you're comfortable with, what your portfolio is, and make sure you size and risk that trading strategy appropriately. There's a lot of thought that goes into the sizing and the risk analysis on that.
I almost feel like Rivian could be a good like Tesla baby brother uh idea. They're just not in the headlines as much as the Tesla is, with just the anticipation and excitement. But being in Southern California, I see Rivians all the time. It's almost like the new sexy car that like Tesla was, 7 or 8 years ago, and they don't look bad.
No, in fact, same here in the Washington, D.C. area. Rivians are everywhere. So I'm quite bullish on Rivian. And you know what? When it comes to automotive, or whatever Tesla says they are these days, it's very difficult to be number one, but it's easy to make strides being number two. And so that has always been the case. Back, I remember saying this exact thing about GM and Toyota and Volkswagen about 15, 20 years ago, when they were vying for the number one spot. Being number one and staying number one is actually quite difficult and quite expensive, which makes, puts a drag on the stock. But being number two, you could just, be in the tailwinds of who's number one and make all sorts of strides and not worry about, your standing, and instead just become a great company. And I think that's where Rivian is.
Yeah, I have a funny LA Rivian story. So being in LA, you see celebrities every once in a while, uh and I drive down Sunset to get to my gym, which is, there's just a lot going on always. And not too
It
not
is true.
not too long ago, I pull up to the traffic light and I just look over and I'm like, oh, that's Seth Rogen, or not Seth Rogen, uh, the funny one, the funny Seth. Uh,
I mean,
I-
Seth Rogen's pretty funny.
oh no, Seth Rogen, right? Not Joe Rogan, Seth Rogen. I
Yeah.
guess Rogan's mixed up, and I'm like, oh, he drives a Rivian, and so now whenever I think of Rivians, I'm like, oh, that's like the low key celebrity car now, like cool celebrity
What
cars.
was
So
that? Was it a Netflix show that Seth did about Hollywood?
that's an
Um,
Apple TV that like
Apple
cleaned
TV.
up. It cleaned up at the Golden Globes.
Did it really? Because my before that movie, before that series, I mean, Seth was just known for being kind of a really hilarious pothead, and then he got all like serious in that sitcom, and I actually watched it and was very entertained by it.
Pretty sure he's still a big pothead in that series. He's just like a movie executive pothead now. So,
Did
uh,
the Rivian windows come down and it was like Cheech and Chong were in the?
no, but I wanted to be like, hey, where you going?
I love that.
All right, AJ's pick of the week, ticker symbol RIVN, Rivian. We've got some speed round names here. Let's see if we can crank through these rather quickly. AJ, Kelly out of Flagstaff, Arizona wants to know: do we have a play in First Solar, ticker symbol FSLR? I think we looked at this fairly recently.
Yeah, and I think it was Kelly who wanted us to look at it before. So Kelly, I think I advised you to actually do some shorting, but now First Solar is quite expensive. So I think I advised you to use some vertical spreads, some bear vertical spreads. Those are opposite the ones we use on our VIX trade, some bear vertical spreads. So at this point, I don't know where they are. If they expire today, options are expiring. So if you picked this expiration date, I would imagine that you're getting max value out of those vertical spreads. I would wait for some sort of. I'm going to switch my gears here and use another one of those. This is the fast MACD calculated on volume weighted average price. So you got a signal on the fast MACD calculated on volume weighted average price yesterday evening. We're not really getting the follow through today, but I would say now's the time to switch your strategy and go with the bull vertical spread. And I want you to remember, because I said this last time, that vertical spreads go from max profit to max loss like in the blink of an eye. So do make sure you size that position. Don't invest anything into the vertical spread that you're not willing to risk all of it. So if you're only willing to risk 2% of your portfolio on this trade, then that's all you can invest in those vertical spreads. And it's a good thing they're dang cheap, because that's you could lose the whole thing very quickly. So only invest the amount that you're willing to lose completely. There's no getting out of a vertical spread with your a little bit of hair in place. You're going to get the haircut or not. So just know that.
Yeah, and definitely one of the more expensive names. So, expensive stocks. So, be cognizant of that when you're building out your strategy. And thank you for following up, Kelly. Moving on to our second name, Dave out of Houston, Texas, wants to know your take on Range Resources, ticker symbol RRC. I believe this one's new to the show.
Range Resources, we could pull that up really quick, get an idea of, let's bring over our options lookup tool. RRC. I was looking at Rivian earlier today, RRC. And then, of course, we could just click this little button. Operates an independent natural gas, liquid, and oil companies in the U.S. You know, liquid natural gas is all over the sea now. They've got all these new special barges for bringing, especially to, Europe, which Europe's cut their ties with Russia with regards to natural gas. So this liquefied natural gas is super critical for their, their transformation into whatever they're doing next. So with that said, hey, RRC is finding a bottom. And it looks like I see my drawings on here. So it looks like I've been looking at this. I'm going to pull out a little bit further. I'm only looking at 6 months. Let's look at 2 years. Yeah, okay. This is a great premium play. And I don't know where you're at with this, whether you're in an initial position or not. But you're at a reversal here. And it looks like we got a signal to that reversal just recently, and it looks like we might be getting the follow through to that. If we didn't get it yesterday, we might be getting that follow through today. I would set up a premium trade, or if you're in that premium trade, it's time to do one of your adjustments. So whether you're putting the collar on, taking the collar off, or doing your initial position, I like it. So yeah, I think you've got your signal, and acting on that signal is a good idea.
Yeah, energies might be an interesting sector through the whole year,
Mhm.
just because of all the different geopolitical events. So, I guess this is a good one to add to the watch list.
Yeah, I like the price of this guy too. So that's good as well.
All right, thanks for that, Dave. Moving on to our third and final name in our speed round. Ted out of Atlanta, Georgia, wants to know your take on CSX Corp, ticker symbol CSX, a popular name on the AJ Brown Show. Where are we at with CSX?
Yeah, this is a railroad. I see consolidation when I look back. I don't know if you're looking back as far as I did, but you can see that this thing has maybe a horizontal or slightly ascending level of resistance, but it definitely has, or I should say, descending level of resistance, either flat or slightly, maybe ascending. I need to look at this closer, but the support is definitely ascending. So I see that consolidation, but I don't see the pivot point right around the corner. I see earnings right around the corner. So you want to be aware of that. It doesn't look like CSX actually has much price action with respect to earnings. I'm looking at all these different earnings dates and not seeing the price go crazy when earnings are released. So that's the first thing I would say is maybe we want to set up on CSX for an earnings play, whether you do straddle or strangler. I actually would lean the way of a calendar spread. But then, as far as trading this, if you get into a premium trade and then it consolidates and ultimately breaks out, that premium trade is not going to be the best structure for that. It won't be the worst, meaning when you're in your collar, right? When you've got your premium trade in place, your trade becomes bulletproof. A lot of people have been telling me, they're like, your premium strategy doesn't pay me the big dollars. I'm like, yeah, but it also doesn't lose you the big dollars and it makes consistent income. All you have to do is babysit these trades. And the best part about them is when the collar is in place, you can sleep easy. If the trade goes against you or for you, you know what your max profit and your max loss or minimum profit is, right? And so you could sleep no matter what undulations happen in the market. You have an investment that's going to be paying a fixed amount. It's not about Premium trading is not about the big wins that could also be big losses, right? And these people are always coming to me with symbols that won, but I asked them to show me the other 6 of their symbols that lost, and they're like, well, the premium trade worked in that case. Well, you can't have it both ways. So with that said, earnings, I would definitely investigate. Premium trades on the short duration, and make sure you err to having your collar in place. And then if you want to, as that consolidation gets closer and closer to, perhaps set up some sort of breakout trade, I think that could be exciting too.
All right, CSX, a popular name on the show. Shout out to our one of our super fans, Boomer Dan. Thanks for hopping on and joining us. Glad to see you. We're still trying to get you on the show at some point, maybe 2027. We could get you to hop on and give our viewers a little bit of taste, because I know, AJ, you were on Dan's show.
We love Boomer Dan. We absolutely do. Hilarious.
So shout out to Boomer Dan. That kind of brings us to the end of our show. So let's go ahead and just remind everybody real quick about AJ's quick links page. The link to this is in the chat. This is again going to give you all the stuff you need to get started using AJ strategies and becoming a member of Trading Trainer. Show some love on the socials. Hit that like, hit that follow, hit that subscribe button. Get that free indicator suite, probably one of the most popular features on this quick links. And then I know AJ and the team is working on some really, really cool stuff on the back end. And so once you head on over to the free member section, you'll be updated on all those releases as they come out. Check out AJ's free daily workshop. If you're interested in custom coaching, now that we're in the new year, there's definitely some more bandwidth there. So if that's something that you're serious about, head on over here, sign up, talk to somebody on the team. And then, if you guys are looking for something to do this weekend, there's a big, game happening with the greatest sports team to ever live. The Chicago Bears will be playing the Los Angeles Rams on Sunday. Sunday night
on our show.
Sunday night football. If you guys don't know, I'm a big Bears fan, and so these are definitely exciting times for me. AJ, if we win, I might have a raspy voice come on Tuesday when we check in.
Nice.
But definitely exciting stuff if you're a sports fan. A lot of great events this weekend. So hopefully the markets and the stochastic news can settle down a little bit and we can enjoy good old All-American football. AJ, heading into the weekend, any final words?
What's funny is we have an annual Super Bowl party that we started inviting people to, and we've got some Bears fans and we've got some Buffalo Bills fans, and both of them said, listen, if the Bears make it to the Super Bowl or if the Bills make it to the Super Bowl, we won't be coming to your party. We'll either be up in Buffalo, we'll be in Chicago or will be at the Super Bowl. So it's funny that you bring that up and you give, your Bears a plug there, because we've actually been seeing it in our friend group. So that's kind of interesting. As far as I'm going, listen, options are expiring today. Our equity and ETF options are expiring today. I'm going to be counting up my money over the weekend, and then I'll be strategizing what to do for the month of February. So that's what this weekend's going to be all about for me, Sib.
All right, folks. Well, hopefully we see you on the social channels. If you have any questions, feel free to reach out, leave a comment, hit us in the DM, head on over to tradingtrainer.com, hit that contact button. Someone will get back to you. Otherwise, we truly appreciate you guys tuning in and joining us. AJ, thank you for your time as always, and we'll catch you guys next week.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll